Well, hey, everybody. It is Sunday, May the 12th. Happy Mother's Day to all the moms that are out there in the educator to trader world. If you're listening to me, whether that's current or as a pre-recorded or you playing the replay, I want to tell you from Arlissa, educator to trader, happy Mother's Day to you. So let's look at what happened last week and what do we anticipate happening this week, and then share some earnings, some trade ideas, and then we'll wrap it up. Okay. This is SPX on the weekly chart right now. This is a weekly chart, which means every candle on here is a week's worth of data. Last week, SPX had a green week. It gapped up on Monday and continued to move on up a little higher. If we were to put on some lines here, see what we may see for support and resistance, then we do see some at 52.57, a little bit of a turnaround there. And these gaps are going to provide some support as well. And this gap here doesn't look like it really goes with anything, but it actually goes with the daily chart. When we switch over to daily, you're going to be able to see it. And then in the weekly area, we also see some support down here in the 49.66.77 area. So just spanning across the 5,000 mark. That's about a 100-point difference between these two, about a 90-point difference between these two. And that's what happened last week in SPX. Let's switch over to the daily chart. Looking at the daily chart, see, I told you this gap was going to mean something when we got to the daily chart. It looked like it was out of place on the weekly chart. But we see here that we had a good little move up. And then on Friday, we did have a red doji, which meant the buyers and the sellers are like, where are we going from here? They're not real sure, right? So there's some support here. The top of the gap, the bottom of the gap, and actually at the middle of the gap is going to provide some support. So keep that in mind if you are placing trades for the week, that these are places where there is support, and you want to trade accordingly, right? Just really giving you some lines here. And remember, none of these lines are hard numbers. Every one of these lines is like a zone, right? They're all like a zone. Just know that this wick shows it can go down even lower. A upper wick shows it can go up even higher. That's the way that goes, okay? We do see that we do have a bit of a positive trend going. As well, we've had a positive trend on SPX for the majority of the year, right? But we are in a bit of a trend now. Whether this trend has done its thing, I don't know. The market does what the market does, but I do see like a little channel that we've stayed in. On the trend line, we've kind of stayed inside this little channel, and it's getting tighter and tighter, and we'll see what happens as price continues to bounce around in it going on up. Okay, that was SPX for last week. Let's go I'll look at triple Q. Probably could go to NQ, I think it's NQ, NDQ, maybe the NASDAQ, but we'll just go to triple Q because I think it'll show us the same things. Well, I changed my mind. Instead of going to triple Q, I went to the NASDAQ instead. Might as well go look at the big boy. And we're on the weekly chart here again. So we're looking to see what the weekly had to offer. Every candle is a week's worth of data. If we look at some support and resistance, we do see some at 18338 is some resistance. And we do have some support down here at 17035. Look at a little bit of a gap between these weeks. Looking at the weekly gaps, which means these are going to want to be filled. Nature abhors a vacuum, as they say. So you want to keep in mind when NASDAQ gets back to these areas, it may try to fill these gaps. And you can, there's multiple ways to trade gaps. You can trade gaps as a buyer and a seller, of course, where if you're buying, you can ride through the gap, be it up or down. And if you're selling, you can get on the other side of the gap and trade that as your sold leg. And do it that way. Let's see what other supports resistances I see on the weekly chart. See a little line here And I see another line over here. Yep. Got a little bit of room here, but the last 3 weeks have been on the upwards ride. And now we've broken out of this big 2 down candle, potentially going on up a little higher, going up a little higher. Yes. Let's change to the daily chart and see what we see there. The daily chart from last week. For the days, still have a little bit of a trend I'm seeing here. Nope, didn't want that one, wanted the trend line. We could look at a shorter term trend, which would be on these. Of course, we could go if we squeezed it together or squoze it. Is it squeezed or squoze? Anyway, if we pushed it together, we would see that there's the longer term trend is happening there as well. But it looks a lot like, if you're looking here, I see a whole lot of consolidation happening. These candles, all of these candles, and we're talking about a big, range, 170 and 183. So we're talking about 100 points, 130 points between these two. Was that 130? It's more like 1,300 points. Let me get my math. I am the math professor. But you do see that we've been kind of in between this zone, kind of bouncing. We were in this area here between 17,800 and 18,300. We were between those two zones for a good little minute, broke out, and we're right back in that area between 17,800 and 18,300, which is about a 500 point gap there, 500 point range, not a gap, more of a range. Okay. Let's look at what earnings we have for this week. Earnings for the week. Our earnings season is kind of wrapping up. When I say kind of, the big ones are out of the way. Not that these ones that we see won't or can't move the market or cause some volatility, but for what we see for the week. On Monday morning before market opens, I see Legend, Tencent Music Entertainment, TME. Tencent is an Asian company. Bitfarms, which falls in the crypto space. HUYA, DDL, which looks like it's an Asian company as well. QBTS, D-Wave, Central Puerto, Fortria, Vitru, and Debt Power. On Monday after market closes, we've got Stone, Terra Wolf, which is WULF, Petrobras. PaySafe is Monday after market closes. Quick Logic, VaxArt, Agilicis, Novio, Gold Royalty. Let me go and turn off the scrolling ticker so that I can see what's at the bottom. Okay, you can stop whenever you're ready. There we go. And then I see Bioceres at the bottom on Monday after market closes. Tuesday morning, we've got Alibaba, Home Depot, HDC is going to be next, SE, Ocugen. We used to trade Ocugen all the time, or at least used to hear it mentioned a lot. And people don't trade it necessarily, but you always heard it mentioned. Sony Group, Intuitive, Miniso. We used to shop at Miniso all the time when I lived in China. That was our main little go-to store, was Miniso. Organogram, BAKKT, and then Hudbay. That was Tuesday morning before market opens. We've got new after close, Next Tracker, On Track, Dragonfly, DHT, Arcutis, GOEV, Rumble. These are all the ones, again, the smaller babies still got to report earnings. Prestige Consumer and Tasha. That's Tuesday after market closes. Wednesday before the market opens, we've got Monday.com. I always thought the Monday reported on Monday. I guess they decided to switch it up a bit for this time. Dynatrace is going to be on Wednesday morning. Hut 8, which I believe that's a mining company as well. Dole is there. ACXP, Cresco Labs, Arcos, Dorados, Make My Trip is there. Sea Energy, and Biopath Holdings. That's all Wednesday before market opens. Wednesday after the close, we got Cisco, Grab, Copa Airlines. I was going to say Cops Airlines. Iris Energy, Core, Fluent, Super League, and ZTO. All of those are Wednesday after close. Thursday morning, Walmart anticipated, Baidu anticipated, JD anticipated, John Deere, GE anticipated, nice, Lightspeed, Under Armour is there, ADS, Canada Goose is also Thursday morning before the open. Thursday after close, Applied Materials, AMAT, TTWO, Take Two is there, Doximity, Copart, Despegar, DXC Technology, Adico Agro, so many companies that are like, wow. And then Friday morning before opens, we got RBC Bearings, Canaan, Bruker, and HTHT, which looks like it's an Asian company as well. I didn't want to go there just yet. So let's go back to, I don't want to go to the trade ideas just yet. I want to take us to the calendar. Let's go to the calendar. Add to the stage. Thank you. Thank you. So this week, now what do we have? Along with the earnings, all the earnings that we just talked about, we also have a bunch of red folders. We got a bunch of red folders. Okay, when we get all the mouse where we need it to be, we can make this work for us. Here we go. I need the mouse over here. All righty. So Monday, FOMC member Jefferson is speaking, Mester is speaking. They always put these as yellow folders, but it depends on who's speaking and what they say, that the market does react to them a lot of times, right? Tentative mortgage delinquencies. I don't know if they're going to share that one because nobody wants to hear about the mortgage delinquencies. Tuesday, we've got NFIB Small Business Index. That's before the market opens, but we've got PPI. PPI is going to be 8:30, also before the market opens. FOMC member Cook will speak at 9:10, still before the market opens, but there still could be a reaction. And Powell, ding, 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 ding. Powell is going to speak at 10 o'clock on Tuesday morning. Definitely, there's a red folder on purpose because volatility expected, okay? Wednesday morning, we got some more red folders, lots of red folders before the market opens. Core CPI, Empire State Manufacturing, retail sales, all of that is on Wednesday at 8 o'clock in the morning. So it's before the market opens. Business inventories and National Association of Home Buyers is at 10. That's those are yellow folders. Crude oil inventories, FOMC member Bowman will speak at 3:20, just before the market closes, right? And just whatever excuse to make the market go wild during power hour. And then tick long-term purchases at 4 o'clock. On Thursday, we've got unemployment claims, another red folder, building permits, Philly Fed, housing starts, import prices, industrial production at 9:15, capacity utilization. FOMC member Barr is going to speak at 10, natural gas storage. Two more FOMC members will speak at 12 and 3:50. And then on Friday is the only day Friday, I think, and Monday, we don't have a red folder. CV leading index and FOMC member Waller will speak at 10:15 on Friday. When I was looking, looks like we have no red. The only red folders are Tuesday, Wednesday, and Thursday. Monday and Friday, no red folder. Doesn't mean there won't be volatility, just means there's not a red folder. Okay, that's what that means. Doesn't mean that we won't have volatility, just means we won't have a red folder. So we got a list here, a list of lots of trade ideas. Lots of trade ideas, right? I'm going to go through a few of these, several of these actually, so we can look at some potential ideas for next week, for some trade ideas. What I want you to do all the time is when you see this list, which of course is a very long list, look on here and see which things appeal to you. First thing you might want to consider is what kind of money do you want to put into your trade? If you want to trade the 50-cent spreads, that's of course fine. Then pick some of these that have 50-cent difference between the two, like Pinterest right here. And this FCX and BAC BP, even though these don't have the 50-cent spread given, these are 50-cent. You know, the difference between each leg or each option strike is 50 cents, which would be $50 of collateral. You can look on the call credit spread side, do some of those. If you want to use $50 on a trade, then pick some of the ones that are 50, 50 cents. The difference between these two is 0.5. that's going to give you those $50 trades. If you want to do a one spread, look at the ones that are one spread. And there's several more of those, lots more of those, but find one or two or three that you really like and trade them over and over and over. Find one that you like, get comfortable with the stock. Maybe it's something you use regularly or something you watch regularly. Pick you a darling and go ahead and trade those over and over. If you want to go with a little bit higher volatility and a little bit higher premiums, then look up here at like the Google and Amazons. They're going to be bigger as far as the price point. And then these are 2.5 spreads. So you do 2.5 spreads, you're going to take in more premiums. And you can put your money in that area. Again, not as much to watch, but decide that from the beginning. This week, I'm going to look closer at iron condors. I'm looking to see how we can use the same collateral, but we can make money on both sides of that. So I'm going to look at those three first, and then I'll pick one off of the put credit spread and one off the call credit spread list, and I will chart those out as well. All righty. Are y'all ready? Are you ready? Are y'all ready for that? Here we go. Let's move over to our chart and see what we see over here. Let's start with Roblox, and I'm on the weekly chart, starting there with the weekly, looking at Roblox. Well, it was going. Roblox, I believe, had earnings last week, which is why you see such a large candle and a large red candle at that. Roblox is very popular with the children. But let's put us some lines on here. We see the top of this candle can totally be some resistance. If we wanted to go higher, we could. But at this point, current price is down here in the $31 range, which is coming into, looks like there could be some support right here. There was some, because notice this wick is down, but it didn't close below there. So I see support at 3107 if you're looking, or in this area. You're seeing that there is some support in this general vicinity. Remember, support is not a hard line. It is not a hard line. If we wanted to put a trend line on here, we could start up at this point and come down. Actually, there's so many ways you can put on trend lines. And I always say that, but you can start your trend wherever you want to start it. And these are going to give you places, okay, that you can connect your, let me see, I want to move this one. Okay, come on. There we go. A little bit tighter trend, but this is what's going on with that. And if you want to look at like a channel, like we talked about on that other one, we've got a little channel going here, and seems like boop, 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 boop. Potentially it'll run on back up from here and provide some more resistance coming down with this trend line. Let's move to the daily chart. We move to the daily chart. Now, what you do see is this big monstrous gap, and I'm calling it monstrous because it goes from here. Looks like that even after that day after we had the gap, the price bounced back up out of there and gave us a little bit of different move. This would be, it was a seller's gap based on earnings, or an earnings gap, I guess we could call it. Let's go ahead and write that on our chart. An earnings gap, and price is even trying to come back into it and do a little something. So we've got some resistance I see at the $40.57 mark. Again, current price is a little bit lower. Let's go see back here and see. Well, we can tell that this is support where it bounced from. We can call this support. And that's probably, and it is, see how it's based on some things even back here in October of 23. There's a lot of kind of standing still back here in this same zone. So this is good support, and it came right on back out of that zone here. So if we've got support here at $29.95. Now what I'm looking at, the reason I'm on Roblox is because we're looking at it as an iron condor. We're looking for Roblox as an iron condor because it showed up on the peak watch list as a neutral. And neutral being it wasn't bullish or bearish based on the 67-day EMA. So at this point, it's neutral. So we're looking here to see, all right, if it's neutral, how can we capitalize off of it? I'm going to put us put 4 lines here on the gap, because this will show us where there will be support and resistance inside of the gap. So if we were to go on up, each the 25% mark, the 50% mark, the 75% mark, of course, and it's a top. All of those are going to provide some level of resistance as we go up. Well, the 25% mark is around, looks like that's 33.29, and the halfway mark is 35.19. Now, just above the 25% mark is this resistance that I see from where the candles and the price action did. I said it's 33.98. So if we're looking here, we're looking for, if you check out, let's check out what our numbers say on here. On our Roblox, we've got 29.5 as our support area and 33 as our resistance. So again, none of this is investment advice, but PCS at above 33. And we've got, according to our list, we've got a CCS, other way around. Lord have mercy. 33, but I got to go back over here because this is a call credit spread, not a put credit spread. No, and no, don't want anybody getting confused. Okay, this is the put credit spread will be down here at below, what did we say, 29.5? Okay, this is what we've got for potential trades as it pertains to, I'll put it closer here to current prices, and call credit spread above 33. I'll leave that there. All righty. That way, now when you use iron condors, what we do is, let's get us some battery. I figured I would record this and it would be able to make it. But as soon as you go live, it starts wanting to kill the computer. We got some power coming. Power. We need some computer power. For iron condors, we use put credit spreads and call credit spreads simultaneously in order to capture premiums on both sides using the same collateral. So if you use a one spread, you can take in money from the top, take in money from the bottom, put that together, and that's your total premium, but you're only using one set of collateral money. One set of collateral money. Okay, that was Roblox. Let's go look at Datadog. DDOG. I think it also had earnings last week. Datadog also had earnings last week. Another situation where we got 222. Let me see. Let me clear off what we have here so we can start over. Start it all over again. Can start all over again. See what we have here. Okay. This is Datadog. They had a gap down for earnings just like Roblox did. Theirs doesn't seem to be as big. Their gap wasn't quite as massive as the Roblox gap. But let's look at this is going to go away. As soon as I move this, I knew that was going to happen. Okay, so I'm seeing some support down here where the price did stop and hit. We do have a little bitty gap. That's between, I'm still on the daily chart here. I'm on the daily chart. So these are daily candles. I also see the gap down for earnings. I'm going to show that it would be down to, down to the top of this candle. Yeah, it will be to the top of that candle. It's weird. The gap really would be from the top of this one. The gap really is this, because it goes from the place where the price was all the way down to where the price moves to. So this really is the totality of the gap, right? Some of the gap got filled in though at the bottom. the bottom here, some of the price action moved up a bit in order to move this gap and close some of it. So let's see, we can go up and take it up to where it currently is and still needs to be filled. Writing. This was, we can put some words on it. An earnings gap. Okay, we got a bit of a gap down. If we're looking for some resistance, it would be in this area, a couple places where price just kind of hung around. There's a gap up here that still needs to be filled as well. This is the daily chart, remember that. All right, so if we're looking here, we're keeping in mind, what would we do for an iron condor? Put credit spread and call credit spread. Notice we have several touches along in here for the support. We got several touches here. 120 is around the place where that is. So now this support that was support all these places could potentially play resistance now that price is beneath it, right? So this could be our upper. Now, when we were looking at our graphic, we have Datadog put credit spread. Nope, 113 is the bottom. 113, 114 actually coming up above this gap here. Yep. And we've got 123, 124 as our call credit spread. Let's go back to this. We got this gap here, the top of this small gap there. 123, 124 takes us up into the center. Into the center of this one. Based on this, we got several touches that are going to be in here. Boom, 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 boom. Put our line right here. Come on, give me my line. There we are. See, we got several touches that were right here in this area where this price is kind of danced around this 123, 124 area. So now let's look at, if we were looking at us an iron condor, basically how far would this potentially go up? Well, we're going to do a call credit spread at above 123. Gotta turn on my fan, getting hot. And we're going to do a put credit spread. Now, what you can do when you're working with iron condors, because you're going to take in premiums on both sides, you can decide to move one more step away on both sides, because when you combine your premiums, there's no reason to be aggressive per se. Not that I have picked anything aggressive, but you can be more conservative with your strikes because you're going to collect premiums from both sides. All right, so that's a thought you have there. But on the graphic, I gave you 113, 114 on the put credit spread side and 123, 124 on the call credit spread side. My suggestion to you is when the market opens, if you like this trade, that you look at the price action from pre-market and look at it before you enter to ensure that you still agree with these strikes. And if these strikes aren't comfortable for you, then you need to make sure that you need to adjust those strikes to give you what you're looking for, okay? All right, let's move on from here and look at Oxy. Occidental is a fuel company. Fuels are starting to move again. Petroleum starting to make a move yet again. So let's see what we've got here. Now, they had an earnings gap as well, gap down as well, that is now mostly been closed. It's not all the way closed, but for the most part it has been. See here, we've got the gap here, and most of it has been closed up. So we can move our arrow now, or move our little grouping here up to a little bit higher. Lets us know that this is our earnings gap. Still probably, well, it hit here and dropped back down. So it didn't, you notice that's why I was telling you how part of a gap will provide support and or resistance depending on where they're located, and that's exactly what this one did. The gap was all the way down here. As price went into it, it got up partway 75% and dropped all the way back down. So this then becomes, well, we already have our support area here from these two candles, and this was support. This little bitty body over here, 63 and some change, was also support, and kind of stopped it right there as well. So if we're looking at support, really 63 is our support. Let me see if what we have on here for the graphics. Put credit spread 61.62 on the put side, put credit spread side, and 65.66 on the call credit spread side. 65.66 up here. We've got above the gap, puts us right at 65. Okay, 65.66 may feel a little tight, but we do have a little bit of room even above this. If you wanted to give a little bit more room, actually that's 65.10. You're still in the area, so you got two resistances or resistance side. The plural of resistance is resistances. What do y'all think? Could be resistance side. No, that's not it. Don't do that. Don't use that as the plural of resistance is resistance. Let's just do that. Let's just do it that way. Okay. We do have another little gap up here, but it's much higher than where we are right now. Not saying that it can't come up here and get in it, because the price can do what the price want to do at any time. Keep that in mind. We trade what we see, not what we hope to see. We don't have the bias. We trade what we see. But up in here is 66. So if you decide you wanted to go up to one more level, you wanted to be a little bit more conservative and go up a little bit higher. But the current price of OXY is, it closed at 63.57. It's down here in this area is where it closed. So 66, good little bit away. But you never know what things will do. Let's look at what would be what could be. We've got call credit spread at or above 65. And we've got a put credit spread. Nope. What are you doing? Let's put us a little box on here, and we've got a put credit spread at 61.62. Now 61.62 really is, in my opinion, a little lower than you probably need, but the reason why I would go with it or potentially look at that is that this last candle is on a downwards, and we have had a downwards trend here. So you do want to, if you're going to be looking to do a put credit spread, you're going to want to keep in mind that there's a downwards trend afoot. There's a trend afoot, right? And it could take us on down into here. And we have, if we were, we could go with this one. I was thinking from here to here, but we've got kind of a closing. It's getting tighter and tighter. And then if this does that, the price is going to need to come out of here some way, somehow. The price is going to want to come out of this zone. So now you are now caught in here. Pew, is it going going back up, or is it going going down some more? That's why we trade what we see. This is right why, as they say, we trade what we see. Right. Let's go look at Taiwan Semiconductors. Actually, did I want to look at that? I may look at C also. I also had Citigroup on here as a look-see. This Taiwan Semiconductors. The semis, of course, have been getting all kinds of love and all kinds of attention. So here we are going to give it a little bit more, just a little bit more. Right. We've got support here at 144, a big old gap. Taiwan Semiconductors gapped up. Let's see what the little lightning bolt thing says happened. I like to read the lightning bolt and see what are you going to tell us what happened? Oh, amid NVIDIA craze, Jim Cramer sees a chip stock not on anyone's radar about to break out. Here's what he said. ARM Holdings plans to launch AI chips into 2025. Wall Street closes up another weekly gain ahead of inflation data. Okay. There's that. Let's put our gap here on, though. We had a gap that was from the bottom of that. This is our buyer's gap. Wasn't based on earnings, doesn't appear to be. Maybe it was in line with as a compassion play or sympathy play for ARM. Maybe it went along with that, but we do have a little gap up here. Got a little gap going on, And each of these lines, each of these positions, 25%, 75, 50% is going to provide some support from here. So if we're looking at our graphic showed us Taiwan Semiconductors is on the bullish list, 143, 144 as our support. Now that puts us 143, 144 puts us up in here, letting this halfway mark of the gap help us with our support. Put credit spread 143, 144. Based on the plus minus number or the implied volatility, based on the ATR, this shows look like it could be a good support area. We've got support back from March of this year at the 144.53, and that's in 143, 144 is below the 50% mark of this gap. So could it hold? Absolutely. Notice we're on an upwards trend here. We're on an upwards trend, and TSM is holding steady. If I was to put us a line here. Now, charting includes a lot of stuff. Okay, charting includes a lot of stuff. It includes looking for support and resistance, looking at trends, checking out some moving averages, looking at what candles are. There's all kinds of things that are included in charting. I do want you to, if you're one who's watching, kind of say, I don't really get the chart thing. What are we really doing? Then you want to go and check out Start with the Chart. Startwiththechart.com. It is a free webinar. Only thing I'm asking you for is your email address, but it's a webinar that allows you to see if you're a basic charter, you can use it. If you know a bit more about charting, you can use it. But Start with the Chart. It talks about candles, candle patterns, candlesticks. It talks about indicators, support and resistance, trend lines, all those things that you would maybe be interested in. If you don't have a clue about charting, then go ahead and check out startwiththechart.com. And while we're here, go ahead and like and subscribe. Put your thumb up, put on the notification bell so you can make sure that anytime I put any content out, you can see it and you don't miss out on anything. Don't want anybody missing out. That's what we're doing. We don't want you to miss out. Okay, let's move over to Citigroup. See what Citigroup has to say for itself this week. Don't know if any of you have been watching any of my capital flow videos, but or have heard me mention. I'm not really created any capital flow videos, but I've mentioned capital flow a few times. And on capital flow, Citigroup showed up again at the end of the week with some bullish movement. Lots of money was poured into Citigroup at the end of the week. Going up. Instead of singing I'm going down, Citigroup is singing I'm going up. We got a little bit of doji here at the top, which basically says there's indecision. It is in a resistance area. Could it turn back? Absolutely. Could it grab some strength and go on up? Absolutely. Little bitty gap here between Thursday and Friday. An itty bitty gap here between these two. And this gap could provide some support, and then it can continue on upwards because it is on an upwards trend, as you can see. This is Citigroup. Guess the banks aren't struggling as much with this whole interest rate thing as some other places and people are. Citigroup falls under the finance sector, right? There we are. I do see, though, that we've been in this consolidation for a period of time. Potentially it'll break on out of it, but it has been here. It touched it back here in April, and we're touching again now. Will it hold and come back down? Potentially come back down to the trend line and take it up some more. Both of those things can happen. What we have for Citigroup is 61.62 as support, 61.62 as some support. put credit spread 61 to 62. Again, make sure when you are looking at these on Monday morning that you're confirming that you agree with these strike prices. You're confirming that you agree with the strike prices. Okay. That is Citigroup on the bullish side. Now let's go look at some bearish stuff, some things that showed up on the watch list as bearish. MGM is one of them. MGM Resorts International. Now you can clearly see that MGM has been on a downward ride, slippity slide. It's definitely been on a downward ride. And if you want to be even, looking at shorter term, it's kind of had a much more steep drop from this big old candle down to the current candle. A lot more steep, right? Steeper and steeper. Okay, but we also have an upwards trend coming. So this will be one of those flags. Now we got into a pivot point. We got to decide, are we going up? Or are we going down some more? Well, MGM on the 67-day moving average shows that it's bearish. No shock there. Look at all these days that we've been going down on MGM. Doesn't mean it can't take them to, get moving. But we do have it. I do have it on our list as a bearish because of the 67-day moving average. And our strikes are 42, 43, 42, 43. So let's put us a line, not a line, our little note here. 42 puts us up here. Call credit spread 42, 43. Right, that puts us above some resistance that is in this area. I went straight for, nope, not that one. I went straight for the trend line and didn't put on any support and resistance lines. This is where current prices is 40 and some change, and we've got some touches right here, back at the 41 and some change. So 42, 43 should be a great connect here. 42, 43. One last stock, and then we're gonna wrap it up. Wrap it up. Okay, we're gonna look at Oracle. Oracle is also on our list as a bearish. You see here we've had a pretty consistent downward ride also, which is why it's on the bearish list. Nope, I wanted a trend line. That's why it's on the bearish list as well. Going through all the pieces and the parts. Okay. Pew, pew, pew. There we go. Got a little bearishness going on Oracle. Let's see what strikes we have on Oracle. 119, 120 is what we have as strikes for a call credit spread. And that could be totally based on, this is some resistance right here. 118.32. Some resistance, couple touches. This was this gap back here has mostly been filled. Not mostly, it has been filled by all the things. Let's get rid of that. And there was something else in here. Did it disappear too? The lines, I guess so. Okay, so we've got 118.32 is resistance. So let's go ahead and put on our call credit spread. What did I say? 119, 120. Again, you want to confirm this when you get ready to enter your trade. Make sure you agree. Make sure you agree that that's what's going on. All righty. Looking here, our membership is always open, the Educator to Trader membership. Every morning we are on YouTube live at 9:25-ish. We come on YouTube and we share what we see at the pre-market, what kind of trade ideas we see, what kind of landmines to look out for through the day. But each day we come on with some trade ideas for sellers. Option selling is what we do. We have weekly training calls. And we have monthly coaching calls on the first Saturday of every month. Any program I put on, if I do a challenge, or I do a 6-week coaching, or anything else, because right now we're wrapping up the 6-week coaching for the live coaching for options 411. But anything that I put on, any program I put on, if you're a member, you're automatically grandfathered into and have access to all of those things. And we have a Telegram, and we have a place where I'm there with our traders, helping to guide and direct, sometimes offer trade ideas and suggestions, just offer guidance as well. So consider going to educator2trader.com and signing up in our membership if that is something that is of interest to you. Okay. Well, I really want you all to know that it's been wonderful. Today's Mother's Day, and we've had a great day thus far. I wanted to record this video to make sure that you had some guidance that you could use going into the week. And I will see you all tomorrow morning at 9:25. All right. Let's do 2 things like we always do. We want to stay green, and we want to get this money. All righty. Goodbye, everyone.